This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil rose almost 2% on Tuesday from a 9-month low a day earlier, supported by supply curbs in the U.S. Gulf of Mexico ahead of Hurricane Ian and a slight softening in the U.S. dollar. Analyst expectations that the Organization of the Petroleum Exporting Countries and Allies, known as OPEC+, may take action to stem the drop in prices by cutting supply also lent support. OPEC Plus meets to set policy on October 5. Brent crude was up $1.49, or 1.8%, to $85.55 a barrel at 13:31 GMT. On Monday it fell as low as $83.65, the lowest since January. U.S. West Texas Intermediate, WTI, crude was up $1.37, or 1.8%, at $78.08.
Europe was investigating leaks in 2 Russian gas pipelines that churned up the Baltic Sea on Tuesday and raised concerns from Copenhagen to Moscow about sabotage on infrastructure at the heart of an energy standoff. However, it remained far from clear who might be behind any foul play, if proven, on the Nord Stream pipelines that Russia and European partners spent billions of dollars building. Poland's Prime Minister blamed sabotage for the leaks, without citing evidence, while the Danish Premier said it could not be ruled out. Russia, which slashed gas deliveries to Europe after the West imposed sanctions over Moscow's invasion of Ukraine, said sabotage was a possibility and that the incident undermined the continent's energy security.
Moving on to the top news in the energy sector.
Russia is likely to propose that OPEC Plus reduces oil output by around 1 million barrels per day at its next meeting in October, a source familiar with the Russian viewpoint said on Tuesday. The meeting will take place on October 5 against the backdrop of falling oil prices and months of severe market volatility which prompted another top OPEC Plus producer, Saudi Arabia, to say the group could cut production. OPEC Plus, which combines OPEC countries and allies such as Russia, has refused to raise output to lower oil prices despite pressure from major consumers, including the United States, to help the global economy.
Rocketing LNG cargo prices have squeezed out dozens of smaller traders, concentrating the business in the hands of a handful of international energy majors and top global trading houses. This grip is not expected to ease until 2026 when more liquefied natural gas, LNG, starts to materialize in lower prices, adding to supply worries for poorer states reliant on it to generate power and driving up costs for big Asia economies. The global LNG market has more than doubled in size since 2011, ushering in dozens of new entrants and the expansion of smaller players in Asia. In recent years, smaller traders accounted for 20% of LNG imports in China alone. Next, we have the top news in metal markets. Iron ore futures rose on Tuesday, with Singapore prices rebounding after 2 straight sessions of losses, as top steel producer China resumed ramping up output to cash in on increased construction activity during the September to October peak season. Benchmark October iron ore on the Singapore Exchange climbed 1.5% to a session high of $97 a ton, while the September contract rose 0.2% to $99. On China's Dalian Commodity Exchange, the most active January iron ore contract rose as much as 1.5% to 721 yuan, $100.61 a ton. Gold prices rebounded from a 2-1/2-year low on Tuesday as a pause in the U.S. dollar's rally helped restore greenback-priced bullion's allure, although risks from looming rate hikes persisted. Spot gold was 0.8% higher at $1,634.19 per ounce by 10:12 a.m. Eastern Daylight Saving Time, 14:12 GMT, after rising over 1% to $1,642.29 earlier in the session. U.S. gold futures advanced 0.5% to $1,641.30. We will now look at the top news in the agricultural sector. The U.S. corn harvest was 12% complete as of Sunday, the U.S. Department of Agriculture said in a weekly crop progress report on Monday, 1 percentage point behind the average estimate in a Reuters analyst poll of 13% and 2 percentage points behind the 5-year average of 14%. Progress across the U.S. Midwest has picked up, but remains behind last year's pace, with the corn harvest 6% complete in Illinois and Indiana and 5% in Iowa. This week a year ago, Illinois had harvested 20% of its corn, Indiana had combined 14% and Iowa corn was 8% harvested. The USDA reported the U.S. soy harvest as 8% complete, lagging the average analyst estimate of 11% and the 5-year average of 13%.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.